So over the weekend, Warren Buffett and his Berkshire Hathaway had their annual shareholders meeting in Omaha, Nebraska. Kind of a rock concert vibe. I mean, it's very much like a Silicon Valley presentation event where you have a sold-out arena and, tens of thousands of very passionate shareholders attend the event. This year was no exception. Typically, CNBC has a whole crew out there on the ground. Coverage is very significant. Becky from Squawk Box usually manages or MCs the whole event, I should say. It's a very big deal. And this particular year of the shareholders meeting was very sad because it was the first one without Charlie Munger, who had been by Warren's side for decades and was really probably doesn't get enough credit for Berkshire's success like Warren Buffett does. And with that being said, the biggest headline out of the meeting was actually that Warren Buffett announced that Berkshire Hathaway had sold about 13% of its stake in Apple in Q1 2024. Berkshire Hathaway is a huge company. Apple is, I think, top 3? Every day it kind of changes, but it's one of the top 3 largest companies in the world with about a $3 trillion market cap. Berkshire Hathaway is not far behind. It's like one of the top 10. I'm not sure where it ranks at the moment, but it's definitely a top 10 largest company in the world, and it has about an $850 billion market cap. So we're talking about a huge company, and Berkshire Hathaway actually has almost 50% of its assets invested in Apple. So for Berkshire to sell 13% of its stake in Apple, that's a pretty sizable portion. Now, Apple was seeing all kinds of different issues in Q1, issues with China, declining sales, market sentiment's been negative from the macro perspective, and we'll discuss those more in a minute. But strictly talking about Warren Buffett and his Apple sale, this is actually the first time that Berkshire, in their 8-year ownership of Apple stock, that they've sold in back-to-back quarters. They offloaded about 1% of their stake in Q4, and like I said, they offloaded about 13% in Q1 of this year. And it really wasn't for the reason that you would have expected. You would have thought that, okay, declining sales, balance sheet looks bad, outlook looks bad. But Warren Buffett tends to look at not only the balance sheet, but also the logistics of the business, like the logic of it. Like he likes businesses with good moats, and Apple with its service business, the fact that people, once they get an iPhone, typically don't get rid of it and get a different product. Things like that tend to attract an investor like Warren Buffett. Now, the reason he said he's been unloading Apple is because of federal taxes. Okay, so what does he mean by that? Well, you have to think back to when Berkshire first bought Apple in 2016, and Apple was trading for somewhere in the mid to low $20 per share range. And fast forward 8 years later, and Apple is trading for about $180 a share, and that's considered a decline from its all-time high. I mean, that is a pretty significant increase. And for a company the size of Berkshire to have that percentage of an increase on a position is insane. It is very difficult for a company that large to get that kind of return on an investment. It's almost unheard of. And so, I'm not surprised that Warren Buffett is ready to start offloading and taking profits. But what he means by the federal tax issue is that he's actually alluding to the fact that he's concerned about the federal budget deficit, which in and of itself is newsworthy because Warren Buffett has always been somebody who's never really been concerned about the budget deficit, just because he says that, well, the deficit as a percentage of GDP is only this, so therefore we shouldn't worry about it. Well, if economic growth slows, the percentage of GDP becomes much larger from the federal deficit perspective, and there's not enough growth to meet the increasing spending of the federal government. Now, considering that the federal budget deficit as a percentage of GDP is the highest it's been in a non-crisis year, so thinking like World War II, COVID, the budget deficit has really been more of a concern than it's ever been before. And without cutting spending, there's really only a couple ways that the government can sort of tackle this problem. One is lower interest rates to cause more inflation and sort of inflate it away. The other is for them to raise taxes, and that is obviously not very politically popular. Now, because interest rates have gotten so high, the government's ability to take out debt has gotten much more expensive and has really become unsustainable. Once again, something we can discuss in a separate video, but Warren Buffett is seeing that the likelihood is that the federal government's going to have to raise taxes to solve this problem. And I think what he's alluding to is that he would rather get out of Apple now and take profits now before those taxes increase. Now, why he feels that way now when there could be potentially an administration change back to a more conservative administration, one that is not likely to raise taxes, I'm kind of curious, but in investing, there's never a bad time to take profits. Take profits anytime you want, the sooner the better. So if I was an Apple shareholder, I really wouldn't be that concerned about it. I really wouldn't think twice about Warren Buffett selling his stake. I don't think what he's doing is a big deal. And the other thing to keep in mind is that really this just boils down to portfolio management. Warren Buffett's not selling the entire stake. He's only selling, gosh, like 13% of it. And after that, I mean, Apple's still going to make up like 40-some% of Berkshire's total portfolio. And Buffett reassured shareholders over the weekend that Apple was more than likely going to stay Berkshire's largest position at the end of 2024. Now, as far as Apple is concerned, they just had their Q1 earnings last week, better than expected. Obviously, the sentiment around the stock was extremely negative, so really anything positive was going to send the stock up. Initially, investors' concern was that China was seeing a dramatic loss of sales simply because Huawei was coming back in force. But that proved to not be the case. They said in mainland China, their sales actually grew from quarter to quarter. So good for them. Overall, iPhone sales were down, but Tim Cook said that really wasn't due to a demand problem. He said that was really more due to lingering supply chain issues dating back to 2022, and he expects the rest of the year to be a lot better. Other CEOs who make Android phones have said that they've seen declining sales as well, and CEOs of those companies have attributed the fact that it's the longevity of modern phones, they're being made a lot better, lasting a lot longer, and the lack of innovation forcing consumers or encouraging consumers to buy new phones has significantly decreased. And the other sort of positive news that came out of Apple's earnings last week was that they actually increased their stock buyback. So the board authorized about $110 billion in buybacks for this coming year. And that's actually a pretty significant increase, about 20% over the $90 billion in stock buybacks Apple did last year. And just to take a moment to sort of explain, buybacks are actually really positive for stocks, because if a company is buying back a stock, it means, one, that management is believing in their company and they believe their stock is undervalued. So buybacks are a really good thing just from that perspective. But also from just like a logic perspective, if a company buys back stock, that means that there's fewer shares available for others to purchase, meaning that you, as an Apple investor, you have an increased ownership stake in the company without having to buy more shares. Your stake becomes worth a lot more. And this is really evidence of what's called free cash flow to shareholders. So if a company is generating cash, they're profitable, they're going to have cash lying around, so they can either give that back to shareholders through a dividend, which Apple does have, or they can do it through stock buybacks, which they're doing now. So, I mean, overall, Apple is a very healthy company. I think their prospects are as good as they've ever been. And as a matter of fact, Apple announced that they're going to prevent something AI-related at the World Developers Conference in June. So, once again, we'll see how that goes. So, if I was an Apple investor, my takeaway would be I wouldn't even think twice about any of this. The fact that Warren Buffett sold shares for the reason that he did doesn't matter to me. Like I said, it's still a very significant portion of Berkshire's portfolio, likely to remain their largest holding, which is saying a lot considering that, with a portfolio that large requires a lot of risk management. So a stake that large is pretty significant. And obviously the earnings report, Apple's just in a downtime right now. They're getting ready for the next phase of growth, and I'm sure it'll come. Not scared at all. Not scared at all. So that's all I wanted to cover in this video. I hope this was an interesting elaboration on this topic. Thank you for watching.